right. Well, here we are again. 2 weeks later. We're now the middle of October. You have your Halloween costume picked out?
We have to dress up for work, and
We have to.
Marianne keeps asking me. I think like as we tick, closer to Halloween, she's like, "Do you have your costume?" And I'm like, "Yeah, I don't know. I got to order something." It's not Halloween's not really my thing in terms of like sometimes the kids have made us dress up, and I procrastinate, and I'm not sure exactly what I want to be, and so I don't put the time into it. And then the last minute, of course, I'm going to scramble around and figure out something.
Oh.
So I feel like it's the same.
planning.
It's the same boat again this year as it has been in past years for me.
Oh, which is scramble at the end.
Yeah, like I was thinking about today, but I didn't want to go and spend any time thinking more than the 10 seconds that I know that I need to go get something on it.
Lily and I were at the store this past weekend getting some more decorations for outside the house and loading up on candy for the trick-or-treaters. And she asked what I was going to be. And I told her I was going to be what I am every year, a dad with a flashlight. I do not dress up.
I mean, that's like my response here. Marianne's like, "What are you going to be for work?" And I say, "I'm going to be," because our theme is like Barbie esque.
Yeah,
and I said, "I'll be a financial advisor." Like I'll dress up as a financial advisor. So you could always have your cop out, but that's not really going to work. That's not really going to work when the day comes around.
Oh, well, it might have to work for some of us. And it's not even that I'm like bah humbug about Halloween. I love Halloween. I think Halloween and like 4th of July are the two holidays that are still like neighborhood block party holidays, where the 4th of July, it's like kids swimming and sparklers and hot dogs.
I agree. It's fun. It's fun.
Halloween,
I just don't prefer to dress up.
No, I don't want to dress up, especially because here in the Central Valley, we get Halloweens that are a little bit hot.
It could work both ways, right? It could be
I think the last time I dressed up, I was Brian Wilson, the closer for the Giants. And I just wore a Giants jersey with a beard and a Giants hat. That's my maximum effort when it comes to with Halloween stuff. All right. Well, markets haven't been quite as scary since we chatted last time. You want to dig into the market recap here?
Yeah, let's talk about what's been happening. I think realistically with the markets, both bonds different than stocks again, though. I think bonds, as we keep reiterating, have been volatile this year. And, they make a little bit of a run in the last couple of weeks, and then, they move downwards again. So the pressure continues to be a little bit more on the bonds, while the stocks have been better over the last 2 weeks.
Well, let's take a look. So this is the market. Now this isn't since we last spoke, but this is the orange line is the Dow, purple line is NASDAQ, blue line S&P, month to date. So as we're recording this, a little bit more than halfway through the middle of October. All the indices are up. The Dow is up the least, about 1.5%. NASDAQ's up the most, about 2 3/4. The yellow line, which I haven't mentioned, is the ag. Which whether you use iShares or the BND Vanguard version of this, it's a good representation of the bond market, down just short of 1.5% on the month. We haven't had, and this is some conversation I've been having with some clients, and this isn't just market recap here lately. If you go back, the aggregate bond index hasn't had 2 negative years. We may have even covered this last time we did this. Hasn't had 2 negative years in a row ever until last year, when the bond market got crushed with high rising interest rates, which set it as the second negative year in a row. So it was negative in 2021, then negative again in 2022. And you stretch this out a little bit and you can say, okay, well, we look the rolling 1 year from the middle of October this year to middle of October last year. Ag is up a little bit more than 0.5%. And over 3 years, take a look at this. Ag down more than 16%. This has been worse than 2008 for bonds. If you have a diverse portfolio, it's understandable. I mean, we want negative correlation, right? We want one going up, stocks going up, bonds going down, or vice versa. Boy, the bonds haven't been doing anybody any favors.
Yeah, I just had a client contact me about 5 minutes before we jumped on to
Hmm.
this, and he called in specifically for a college account and said, "I'm wondering, should I sell my bonds now or should I sell them 6 months from now when I actually need the money for my kid's college tuition as he's getting into graduating?" And
Yeah.
I said, that's a really hard question to answer because 6 months from now, if you asked me 6 months ago, I don't think I would have expected the bonds to be down like they are today.
No.
And for all these reasons that we just didn't know about. And so for me to say, I think that the markets, will be better 6 months from now. I think that it could be. I definitely think it could be, but I would have thought the same thing 6 months ago.
Yeah, well, there's no
And
crystal
so
ball. I mean, the Fed kept cranking on interest rates, and then the 10-year yield has finished the job on its own and tightening things up. It's tough though because what a lot of people have, and this isn't true of certainly of all of my clients, but what a lot of people have are something called a target date fund. It's this is I'll pause here. This is not a recommendation of any kind of investment, but a lot of people in their 401k or whatever they have at work, or in their 529 college savings plan have a target date fund, which means as it gets closer to the target date of whether it's retirement or entering college, it gets more conservative. And when we say more conservative, it starts switching slowly from more stocks than bonds to more bonds than stock, with the idea that the bottom can't fall out of it as you're heading off to college and paying for books, as you're headed into retirement or whatever it is. And if you are 17 years old and this target date fund has cranked down to be way more bonds than stock, you've actually come out behind by following that tried and true strategy.
which is the opposite again of what everyone tends to think of how things work. You look at this chart being pretty good catalyst. If you started to get more into the yellow line than the other lines over the last few years, with the
Right.
idea that you're going to be preserving money by doing this, it's worth the opposite.
Right. And I think one of the things that, I mean, we're back. Um, Let me see if I can find the 10-year. We're back with rates. Um, Let me see. US 10-year. I don't know if I'm going to be able to get the yields here. Well, here we go. No, I won't be able to. I can't do it on the fly. But rates have been cranking higher. I didn't prepare the chart here, but the idea though is that I think we're getting to this point now where the treasuries and the Fed, and I think there's this general feeling that we've peaked out, right? So if we're talking about bonds into the future or anything having to be interest rate related in the future, maybe the beatings have finally stopped from rising rates.
I could say that the only thing that probably still lingers out there that may put us into like a different environment with these interest rates, maybe more on the long end than the short end, of course, is that maybe some of the reasons why things are lingering higher and will maybe continue to be higher for bond yields is because the fiscal responsibility. I think we've talked about this too. Like the U.S. right now is in this predicament where we're not seen necessarily favorably by a lot,
Right.
especially abroad because of some of the issues that we've had and the amount of debt that we keep increasing. And
Right.
so, eventually maybe that plays into that you have to pay other people, you have to pay bondholders more yield to incentivize them to buy your bonds. And
Sure.
so that's a possibility that could end up lingering more longer than we actually expected. That's something that we really didn't have to deal with in the past.
Yeah. I mean, here, I'll go 20 years here. I think I found it. Here is, well, yeah, maybe not. I've got the Fed fund right here, but the fact remains that I don't know. It's been a precarious time to buy bonds. But if rates are going down, I mean, this is what made all these investment banks in New York in the 80s the billions and trillions that they made, right? Which is falling rates and bond markets skyrocketing higher. It's hard after 3 bad years to believe that the setup for bonds going forward could actually be pretty decent.
Right.
That's something to think about as well. And I guess that's why we diversify, because one thing that has held up are tech stocks. I won't name any names in particular so we don't catch ourselves in a compliance pickle here, but just generally growth stocks, US mega cap, some call them the Magnificent Seven. um, have been a big deal here, and some of it is in part due to AI, which is your chart of the week here.
Yeah, so I thought it was just interesting to think about, the relationship between AI and maybe the way that the stock market, or how the stock market might be able to benefit going forward. Because really, if you think about margins kind of like the amount that you can make, right, or more that you may be able to make, in terms of
Margins are your profit,
the profits,
right? Not what
how
you
they can go up.
charge, but what you keep after charging somebody for something.
Yeah, so if you make a dollar, as a company, but 80 cents of your dollar go to the cost of your real estate, your labor, your supplies, et cetera,
Right.
then you're making 20 cents. And then obviously, if you can make 25 cents instead of 20 cents, that's going to be all the better. And generally, when that happens, your stock is going to get rewarded. And if this happens more broadly throughout all or most of the industries, you would expect that the stock markets can go even higher, right? So margins really are important for the markets to go higher. It gives good reason for the markets to move higher in the future. And so it's interesting to see, because AI has been this, the storm that has come in the last year, and we've talked about it a little bit here and there, but not so much about where what the implications are for the market. And as you can see from this chart, this is kind of broken down by industry of what Bank of America, kind of their research department, expects margin growth to be like, or the impact that AI is going to have on these industries,
Right.
kind of going forward. And you can see that there's going to be industries that are going to benefit more than others.
Sure.
And if you think about how this is going to really affect margins, you can think of it maybe from a manufacturing company, where AI can better, navigate and maybe even tell you when things are going to break, right? Like you have machines, maybe it says you need to service this earlier, or you need to replace a part earlier in order for the machine to keep working, not to have downtime. These are all things that keep margins higher when you have AI helping you out.
Scrubbing out inefficiencies in your systems, right?
Yeah. Or in agriculture, it can help with the impact of weather to less waste in agriculture, to the amount of water. More water might be useful to get more capacity out of things.
Yep.
It's going to affect a lot of different industries, as you can see, some more than
Yeah.
others. But
Well, and it's not just services, right? Like it's manufacturing, it's services, it's kind of the whole gamut of if as far as margins are concerned. And then your other chart was just showing revenue potential. I don't know how it's going to impact us with revenue potential, but financial services, semis, and tech hardware are the top three here on revenue potential.
Yeah, I think that one of the things that most people understand about AI, and one of the big implications, I suppose, from a job standpoint, it replaces people. From a business standpoint, obviously that makes things more efficient, because it just, if you could get the same job done without having to pay for so much labor, it's going to increase profit margins. And
Yeah,
so,
I mean, there's already AI trying to do investing, and it's fallen behind its human peers, I guess. So when we look at financial services on top of this, we're not necessarily saying that AI is going to create, a perfectly performing portfolio for you necessarily. It's revenue potential that could, where it could kind of create new streams of income, even perhaps, because this is the revenue chart. This isn't the margin chart, where doing more with less is the margins, right?
yes.
And financial services are still in here in the green, so that would be more with fewer people. But maybe this is finding new ways to solve a life insurance problem for somebody, right? Decide if they're insurable or not, rather than kind of the blunt instruments that get used right now. Could be
I
interesting.
think that this chart was probably a little bit harder to predict, because I,
Oh,
we
yeah, there's no
we don't
telling.
understand like exactly what AI is going to be able to produce for us, right? 5 years from
Yeah.
now, in all likelihood, or 10 years from now, it can produce things that we didn't even imagine, right? And so the whole
What does AI produce for you right now?
right now, this second, I mean, there's some of the stuff that's probably on my phone that I just don't think twice about. I mean, it's in software that we use, but I don't think it's nearly, where any of us imagine it's going to be 5 to 10 years from now. And you can't really, I don't know how you generate a chart on revenue when there's going to be things produced that you don't even know about yet, if that
Right.
makes sense.
Yeah, no, it does. And the Wall Street Journal just had an article. I think it was the Journal had an article on AI and how it's helping overwhelmed parents, is an example. Where they give this example of a dad writing a poem to his daughter every day, except it's AI doing it. But it also wrestles with, like, does that mean he really is writing the poem or AI is writing the poem? I guess maybe what matters more is that his daughter feels good about it,
Yes.
I guess, for our parents. Do you use AI for anything right now?
We use it every now and then to help me write something. If I have a general, synopsis that I need to get out, or I need to do a quick research, sometimes even for this podcast, right? Like we're,
Yeah.
can get some ideas, some quick
Well,
information.
it's easy for generating definitions or some
Right.
understandable definition where you, instead of a Google search like what is inflation, it's explain inflation to someone without any economic background, and maybe you can help you with your phrasing. Certainly, I know Sam Altman, who's created ChatGPT, or his group has created ChatGPT, on Joe Rogan recently, described AI as being good for tasks but not jobs. So it won't replace a person, but it can make a mundane task or a time-consuming task a little easier and more automated, which I think is an interesting way of thinking. It's not going to stay that way necessarily, but it's an interesting way of thinking about it.
Well, yeah, my wife's a school psychologist, and she has to write a lot of reports, kind of an analysis on kids to then present to the parents.
Yeah.
And she's mentioned over the last few weeks that she's actually started to use some of the different AIs to help, just kind of smoothen the reports out, make them more understandable, speed things up. So even in education, now she's not a teacher, where this is being used in the classroom, but I would have guessed for her, I would have guessed that I would have been using it a lot faster than she would have. Let's put it
Yeah.
that way.
Well, in writing, it really helps. I mean, you can copy and paste something, and I see so much writing. I mean, as writing has become more brief, whether it's emails or text messages, the quality of our writing has become terrible. And you could copy and paste something and say fix the grammar, and it could change the active voice to the passive voice, or the passive voice to the active voice when they're mixing it. Someone's mixing it up in the same paper. Little things that can make a big difference, but it's coming. I will say, I think I've mentioned this on the here before. My primary use for ChatGPT is coming up with creative bedtime stories for my kids. So I even tell them, I don't even come up with it anymore. We say we're going to choose 3 characters, and it's like Sammy the cat, a girl named Charlotte, and a pig named, I don't know, Winker, and write a Halloween bedtime story for a 7-year-old girl. And bang, 4 paragraphs, wraps it all up nice and tight.
And they probably like that because they get some input. It's almost like a game. They put some of the names in there, and they get the results, and that's kind
And
of
I'm the
fun to
least
see how it
creative
plays out.
dad on the planet, so it helps me out in ways that I'm not going to be able to come through for my kids. So it'll be interesting to see where we are 5 years from now, because Sam Altman had also said that the iteration of this is not going to, think about your iPhone. This is the example he gave. If you've upgraded from the iPhone 14 to the 15, the difference is slim, almost unnoticeable. But if you compare it to the iPhone 3 or even the original one 10 years later, the iPhone, well, what, we're 15 years now that we've had iPhone. If you compare it to one 10 years ago, it's like light years ahead. And so we're going to start to get those kind of incremental but compounding improvements in AI. So I'm very curious to see 5-10 years from now what this looks like and how
like before we get off this topic, I had sent you an article by Tim Urban. He had wrote about an article about AI years and years ago. And the picture that he drew was actually very good to think about the way AI is going to work. And, if you think about technology as like a slope of where we've been, it's been, for hundreds of years, it's been this very slow, pace upwards in terms of growth. And then like
Right.
it has this guy standing there, and behind him is this, slow line going up, over the last few hundred years. And then like right in front of him is like a wall, basically, that the slope.
It goes exponential.
Yeah, it's
Right.
just everything changes in front of him, right in front of him, right? Because that's where we kind of are with AI, is that it can change so much so fast.
Well, and the idea that AI itself is compounding, it gets better on top of itself,
Yes.
and so that slope that you're talking about, or that the going vertical, almost an improvement, it's because AI becomes more powerful because AI became more powerful. That's going to be pretty crazy to witness if we see it in our lifetimes,
Yeah.
And I think there's a fair chance on this trajectory that we might. I don't know. It's interesting stuff. Lots of people are fearful of it, though. I know my wife doesn't trust AI, even though AI is the one that's saying, like, your car is telling you to apply brakes when it senses a car in front of you braking. That's a version of AI, right? So it's here. I don't know. It's interesting. Going to be interesting to see. I do not have any AI charts for us today. I am still consumed isn't the right word, but I'm still very much interested in where we're headed and why we don't have a recession yet. We had a I will say, if you didn't sign on for our webinar that we had today with economist Bryce Gill from First Trust, email info@FordFG or talk to your advisor here at our office, and see if you can get the replay, because I think it's worth hearing another voice on this. And we talked about recession, likelihood of recession. Wall Street Journal, what was it? Over the weekend, had an article or a report that a recession is no longer the consensus, and that we have now tipped below the 50% point that economists that were surveyed by them think that there will be a recession. And you can see we were kind of peaked out at 60% of economists. Now we're below 48. And the economists that are citing declining inflation, the Fed's done raising interest rates, still a robust labor market, and growth that has outperformed expectations. And in fact, we had a CPI of 3.7 in September, which is pretty good growth, pretty good inflation rate. But they expect it to be at 2.4 by the end of 2024 and 2.2 by the end of 2025. Pretty close to that Fed 2% target. What do you think, Ryan? What do you think about?
I think survey? What's kind of playing out right now is that if we're holding interest rates kind of where we are, more or less, for the Fed. And so if like the economy can deal with that, and I think what's showing is that the consumer continues to spend money. And you can poke your holes in that, like, if how much more can they spend, but if they can continue, and part of that relates to, again, a strong labor market, right? People have work, they make money, they could continue to spend money. Maybe the interest rates don't derail the economy enough because people continue to spend money. I think as long as that kind of holds tight, then I can see where we may be able to avoid recession. I mean, that's going to be at least your case to say why and how we avoid it.
Yeah. Well, I think our speaker today, and I think some people might agree, I think a lot of people hear recession and they think, oh, wait. And I don't think that's what's on the table here, right? I think we're talking about a couple quarters of negative GDP growth, which we actually had for 2 quarters a year ago. But we didn't, but that really wasn't a recession because it was kind of technical in nature and not actually happening. Even if the unemployment rate, goes up by 50%, we're talking about it going up to what, 5.5, something, right? Not 10 or 12 or whatever god awful number we had in 08, or even during COVID. So I for one still think we're going to get a recession. The question isn't if, but how much, in my view. Yeah. I'm not an economist. I wasn't surveyed. This is just my own experience of a decade and a half doing this stuff.
But what ties into that recession, if we have one, it's in say the next 6 months is that, again, you have to almost expect markets to go lower than where we are right now, just because.
Oh, I think you're seeing consumer stocks fall. I think consumers start to cut back. I think people are going to cut back. I think that cushion that they had where people would go grocery shopping and they see a pound of bacon or see the cost of price of egg and say, "Oh my God, look at how expensive this is," and then they put it in their cart and check out anyway. I think that is going to come to an end where consumers, certainly on the bottom quartile, maybe of consumers, people who have less cushion and less money, are really going to have to make some hard choices and make some cuts and cut back.
Well, this is anecdotal for me, but like I definitely have had more discussions with the people around me about just, the cost of goods going up, and that has been around for a while, but it's
Sure.
more of the cost of goods are going up. We need to make some changes. Like we
Yep.
can't keep doing this or that. And so if that is at least, happening more with people, just around me, then it is going to have an effect on the economy eventually.
Well, I think we're going to have some cuts, and so consumers are going to cut back, which are going to cause hiring and then employment to be cut. Frankly, we're talking about AI. I mean, if you have, for example, in California, the law was just passed to have $20 an hour for fast food workers. You can't tell me that McDonald's isn't racing to get as many self-checkout and AI systems in place because it's cheaper than paying a whole bunch of people $20 an hour. And so whether it's efficiency from technology, consumers starting to cut back, and it's recessions then become this confidence cycle that builds on itself, or lack of confidence cycle.
Yes.
And so I very easily could see people that have been job hopping these last couple of years for a $5,000 raise here or there. Labor is as empowered as it is, that pendulum start to swing back the other direction, and unemployment start to go up, and we have a couple quarters of negative GDP. I'm not saying it's going to go forever, but I think that's what's going to help us get to that 2.4 CPI number at the end of 2024 that economists are suggesting, or that these surveys economists have suggested. I don't know. I think this, if there's a takeaway here, it's basically a coin flip among very educated, smart people. Nobody knows. People don't know. We are taking sides, and probably some people are cherry picking data to support their preconceived ideas. But the reality here is people don't know.
Well, the one thing I would say too, when looking at this chart, is that, as things like get really bad, and you saw this in 08, things got bad fast, and you saw this again in the chart, that pink line in 2020. COVID was really fast, right? You knew things were getting bad really quick. The line just shoots up, right? It's almost, as you start to see the news, it's really just in your face that it's a known fact that the recession is just going to happen. It's just a matter of when they call it, and that's when that line just.
Well, it feels like we're all playing musical chairs, where we're slowly circling the chairs, waiting for the music to stop, and when it does, or we feel like it is, everybody's going to grab a seat real fast. Yeah. I think the only reason this hasn't happened sooner is because we've had these cushions of cash. And so if there's anything that's different this time, with the yield curve inverted and rates cranking up and all of this stuff that goes on, leading indicators just screaming recession is on the way. The thing that's different this time isn't that we won't have a recession or that we'll have some soft landing with no recession. I think what's different this time is that this amount of cushion of money supply that we grew by 50% over 2 years was able to provide so much cushion that it delayed the inevitable, didn't avoid the inevitable. That's my take. But this doesn't, we're talking economics here. I'll point out, this is not, I don't even know that this is actionable information from an investment perspective, right? Because once you're in a recession, it's pretty well proven that markets start to move higher in the recession. Investors are betting on rates coming down. Investors are betting on winning the recovery.
Yeah, the markets move typically 6 months. They usually say, ahead of the economy. So, you're going to you'll bottom out before you can't use it as a timing mechanism.
No, not at all.
And definitely at this rate, a 48% chance of not happening. Like you said, you can't really bet on 48% anyways, because the next time they have this and it's for we're at 52%, you're not going to make a change based upon a percentage that's straddling.
No, and these are economists, and they're talking about the economy. They're not talking about markets and whether that ticker that you like is overpriced or if it's a good investment or when it's a good investment. God only knows. But when you see the headlines, we're in a recession and unemployment's going higher, it's a good time to take action and maybe see some opportunity, I guess, is where we can leave this one. I will link. I'm terrible in introing this podcast. We will leave a link to our website and the Ford FG info at Ford FG email address in the show notes here. I'll also link this chart from Charter, which is really repackaging the article from Wall Street Journal, which I'll link to also in the show notes. And then we'll also link Ryan to the article, the Substack article where you grabbed your AI charts, so people can check them out if they want to and take a look. Okay, so let's wrap up. We're a half hour-ish into this. What's on your mind this week?
Well, as may be apparent in other podcasts, like I'm addicted to pickleball. So a few weeks ago.
Wait. As a parent, wait, say that again. You have someone else in another podcast addicted to pickleball?
No. As I have mentioned in this podcast.
Oh, in this podcast. I thought you said another podcast.
Like, you may have gotten
moonlighting in a pickleball podcast.
I've talked about pickleball a lot.
I thought you're moonlighting in a pickleball.
No. So a few weeks ago, I was out playing pickleball and it was raining. It was Saturday morning. It started to rain. So we went under the cabana area and somebody approached a group of us and said that he's opening up a indoor pickleball facility. And so it's very interesting. So as a pickleballer, right? And Fresno has extreme temperatures. It's not pleasant to play in the morning and the evening times in the winter. You can't play during the daytimes, during the summer. And so we are
worst.
We're ideal to have an indoor facility. But I will say, I've been playing, maybe 10 months now. And, there's been times that you see these other cities get these indoor facilities, whether they're restaurants or if they're just taking over a store. And you're like, oh, that would be really awesome to have. Apparently, we're getting one over by the old the old Costco that's in Clovis. Towards that area.
Old Clovis Costco.
Yes. So there's one coming in there.
In Ashland?
Yes.
Okay.
Yeah. So a little far from me. But then he said that they're opening up another facility at the Walmart that was closed on Brawley and Shaw.
Okay.
And so that is closer to me. And
I've thought the minute you do pull the Spirit Halloween kind of deal, the minute they go out of one of the burned out grocery stores, we needed to set up some pickleball nets and some tennis courts, not just pickleball.
Yeah.
So that way, those of us who still want to play tennis can still play tennis at the end of July.
Yeah, it's exciting for me just from a perspective of other cities have this. Again, we can benefit from this with the kind of our extreme temperatures and not wanting to be outside during like winter and summer. So I think it's exciting for Fresno, whether or not it's sustainable, because I heard that there is a restaurant / pickleball facility that's going to be built over on First and Herndon. As well by somebody else. So it may be all too much happening too quickly, even as sports growing.
Are you calling the pickleball bubble right now?
I am saying for Fresno, it might be getting over its skis a little bit. We may, it may be hitting some kind of like pickleball recession with the amount of courts and stuff that's being built.
As long as there's some tennis courts in there also, I'm all for this.
Good luck with that. I will say that I only say this because if you're taking over a Walmart and you're going to put a tennis court in there, you can only hit a pickleball so high that your ceilings don't actually need to be that high that you have to worry about. With the tennis ball, you probably need to be 2 to 3 times higher vertically to accommodate for a tennis court versus
have you ever played tennis inside?
I never have. No, I take that back. I did. I played a Labor Day weekend in Vegas. That was my first time, just last month.
Vegas, similar weather to us. Perfect. Did you smack some Alcaraz style lob that hit the ceiling?
No, but again, like that, the facility I think was built with the intent of having a court versus you going into a store that was never intended for a tennis court.
Yeah,
and then,
I see what you're saying. I don't know. Maybe they need to host a tennis tournament in the Sphere in Vegas.
Oh, that would
That's
be
why they
awesome.
need to do it.
That'd be awesome.
Okay, so I'm excited about that. Hopefully it opens soon. Maybe I will play more pickleball if it's inside and I have no alternative. What's on my mind? A couple things on my mind. One is on the 24th here in town, we are hosting wine tasting for clients that are interested. So this was a hit last year. We have in the past done client events where we had a speaker and did some sort of wine and food deal. Last year we had to break it in two, and so we did the speaker online and did just the wine tasting social element in person. It was a hit. So we're doing it again, bigger and better than last time. I'm very excited about it. The sommelier for our evening, which is, if you listen to this podcast, you will know him, is Joe Perry, Mortgage Ninja, who's I just attended the local FPA chapter meeting and Joe was a presenter there with his presentation titled Joe Perry's Black Bag of Mortgage Magic Tricks. It's a mouthful, but it was great. It was really awesome. So I have already cornered Joe and told him we need to have him back on this podcast so he can give some of these crazy anecdotes of how weird the mortgage market is, right? The reality is 30-year mortgages are above 8% right now. I know if you Google and see the average mortgage rate, it may not say that, but in his experience, he was saying it is. And how lending has gotten tighter and you need to be a bit creative if you're doing some financing, purchasing, whatever it is. So I'm excited. So I guess two things are on my mind. One is this wine tasting that I'm excited for because clients are going to have a good time. And that weaves in nicely because Joe is going to be there as a wine expert, but we also are going to tap Joe's expertise and his black bag of mortgage magic tricks here very soon for the podcast. So
Joe's great because we did this again. He helped us last year. And for those that are into wine and like to talk about wine, Joe is more than happy to talk to you for the entire night about it. That's like his passion.
Yep.
And he has all the knowledge to be able to talk about and back it up as well.
I will tell you, I'm doing sober October, so I will not be able to. I'm taking the month off, and it means I won't be able to enjoy any of Joe's recommendations until November 1st. So I get to wait for this for me. But what are you going to do? All right. Let's leave it there, Ryan. Until 2 weeks from now, or maybe we'll be joined by Joe 2 weeks from now. We will see what the future holds. But for now, happy Halloween. And you're going to have to fill everybody in on the next one of what you dressed up as.
All right. Maybe I'll even have a picture.
Yes. Have Linda take a picture and send it to me. Excellent. All right. Until next time.
All right.